Andrew, we're talking about some value stocks in the JSE at the moment. Construction stocks have been laggards, and perhaps for a good reason. We had numbers out of Group 5 yesterday. They're expecting a 15 to 25% fall in headline earnings. So the outlook's still not looking very positive for those construction stocks.
No, unfortunately, it's not. We saw those numbers, 15 to 25% down headline earnings from Group 5. They were slightly worse than expectations, but they were expected to be lower. I don't think it's the end of the world. We saw Group 5 down yesterday, however, they bounced back today. Group 5 is a company that we hold at the moment. These are all incredibly cheap companies right across the construction sector. Group 5, for example, trades on a PE of about 6 at the moment, dividend yield of 3. That's very attractive. We do believe it's not all doom and gloom for these construction companies. If you look at Sub-Saharan Africa, it's the fastest growing region in the world. There's going to be a lot of work there. The catalyst here is the government coming on board with the public works program. When is this going to when are they going to kickstart this? Another construction company that we really like is Aveng. This stock's attractive to us from a number of points of views. The one is it's about a market cap of about 16 billion. They've got about 8 billion free cash sitting on the balance sheet. They're moving into Africa. They've got operations right across the world in the Far East, Australia. So this, you're not going to see a slowdown, or you might see a slight slowdown, but it's not going to be a dramatic slowdown in their work in the pipeline. So these companies, although they've been hammered down a bit, we still find them very attractive.
Aveng also a bit more diversified on the steel side, isn't it?
Yes, exactly. They've got a lot of exposure to steel. Water salination is another, or desalination is another area that they're focusing on at the moment. They've also just had a share buyback of about R1 billion. As I said, they had 8 billion free cash sitting on their balance sheet, so they're using a bit of that, which is a nice thing for a value investor. Research shows that if a company is buying back its own shares, those shares tend to outperform in the long run.
How do you time your entry to the construction sector? Because you don't want to get in too soon, but you also don't want to miss the boat and wait until the share prices start rising.
Exactly. If you miss the boat, then you're too late. Market timing is proven to be very, very difficult, to almost impossible to get right. Unfortunately, we've been in these construction sector, or in these construction stocks rather, for probably about the past going on a year now. So we were probably a bit early, but unfortunately that's the way it is for.
Do you think they're at rock
investing.
bottom now, though?
I don't think they. Well, if you've seen Aveng over the past 6 months, Aveng have actually performed really nicely, going from around 35 rand to about 45 rand. So it's not. I don't think they're at rock bottom. I think they're past rock bottom. However, yeah, as I say, value investing, you tend to get in a bit too early. You tend to probably get out a bit too early as well. But to try and time the market, if you get it wrong, you've missed the boat.